Hey traders, welcome back to the Trend Factor channel. I'm Frank. People always ask me, how does your strategy work? How to prove it? Well, first, I understand people's concern because the three-step strategy seems very simple, and most price action strategies are complicated. When you talk about price action, all those terms come up: support and resistance, breakout and retest, higher highs, lower lows, consolidations, reversal, and so many complex candlestick patterns. It seems like a big maze how price action traders are approaching the market. Believe me, when I first started, I felt exactly the same. Apart from the complexity of price action trading, another huge issue is there is no real standard. It seems like people are trading spontaneously. One day it's traded with these concepts, and another day is totally different. As traders, we need simple rule-based trading strategy because in the changing forex market, there's nothing more distracting when you need to make decisions and your rules are still unclear. Of course, those gurus can trade whatever they like with experiences and everything, but as a new trader, you need black and white conditions if a trade is qualified to be taken or not. In this video, we'll see how the three-step strategy work in the real market. First, we'll discuss the three-step strategy we use for all our trades because there are new traders watching this video who are still unfamiliar with that. Then we'll go to the chart together and see how many times it worked and how the simple three-step trading strategy is. Step 1. Identify false breakout and draw the trend line. Step 2. Find the initial move and pullback. Step 3. Wait for smaller reversal pattern for the entry. Step 1 is to identify trend. Because we are trend traders, we only trade with trends. A false breakout is when market breaks a daily level and returns back to its range. It shows the breakout traders are trapped and the market is going to the other direction. That's our way to identify a trend start. After that, we'll mark D1, D2, D3. You may ask, what are those for? Since we are day traders, we only trade intraday. When a bigger trend is established, we are trying to grab a piece of the trend within our trading day. That's why we need daycon to plan our trade. As long as we are above the bullish trend line or below the bearish trend line, we are good to buy or sell if market gives us a chance. The second step is how we find good trading opportunity in the day itself. In our strategy, we have a watch list of over 10 pairs. In most cases, price action will be messy. Market won't give us a good chance to join the trend. Maybe it's a heavy consolidation day or a big news to move the price, or maybe it's just up and down until midnight and spikes to its target. Market is unpredictable. If it were that easy, like perfect template everywhere, everyone will make money. That's impossible. That's the reason why we need strict rules for even considering to trade a certain pair or not. So we need a clear, strong initial move and pullback for putting the pair on the watch list. Otherwise, we don't even look at during the session. Step 3 is the actual waiting process for entering a trade. For a typical session, we might have several pairs, all in step 3. We'll wait and see which one performs the best and pick our trade accordingly. Step 3 needs a smaller reversal pattern for the entry. For example, if we were in a downtrend, price made a downwards initial move and put back up, then we needed a smaller M structure, confirm the price is ready to go down to place our sell entry. Some other important concepts are session window and news. For the session window, we only trade in 3 session windows where market has bigger volumes. You can see the color blocks on the chart, which shows Asian, London, and New York sessions. If the move happens outside session windows, we don't trade it. And we don't trade news for obvious reasons. If there's big news coming, we ignore the pair. Now let's dive into the chart and see how many chances we can spot a setup on a pair. Since we have over 10 pairs to watch, there's good chance you can spot at least one good setup per day. Let's use gold because it provides trading opportunities almost all 3 sessions. So we'll use the M15 chart to see this month's gold price action to see how many chances we actually got. May 1st Thursday, price was in a downtrend and I made a clear down move in Asian session. There was the M and the neckline. In the London session, price pulls back to the neckline in 3 pushes. 1 push, 2 and 3. Smaller M pattern. Okay, this is the M. And the 515 candle, this one price broke the neckline of M, and this is our entry. It was the day 3 trend trade, and the next day supposed to be day 4 down, but there was no strong initial move down for us to follow, so there was no trade, and it became an inside day. The next day was Monday. Price broke the inside day in Asian session, pulls back trend. We're not gonna take the buy trade. If we look back, price actually made bigger false breakout to the downside over 3 days, and it broke the trend line to go up. So we call it day 1 to the upside. Tuesday was day 2. Let's draw the trend line first. Yesterday after New York session, price made clear and strong BIS upside, and before Asian session, it put back in 3 pushes to the neckline of this W formation. In this bullish candle in 9 o'clock, price broke the smaller reversal pattern and go up. We can get in here. As we can see, the candle was so big. If we can get in the lower time frame, yeah, maybe 20 pip stop loss. This trade go to 4R. This was the day 2 trade. The next day was Wednesday, day 3. Price broke the trend line before Asian session and consolidated almost all day. Let's draw the neckline of the downtrend, and there was M structure. As you can see, price didn't reach the neckline all day, so there was no trade. The next day was Thursday. At the beginning of the day, we're not sure where price goes, but in the London session, price broke down yesterday's low, showing very clear downward momentum. Let's draw the M and the neckline. You can see this is the M. This is BIS. This is a neckline. And the price and the New York session, it printed a smaller M. This 11:15 candle was the candle price actually broke M structure to the downside. It was the perfect time to place the sell trade. 18 pip stop loss for at least 3R. The next day was Friday, and day 3 became day 1. And Thursday was day 2. If you look back, price actually made a bigger false breakout to the downside over 3 days. Friday was day 3 for the sell. In the New York session, price put back to the neckline and traded down. In this 10 o'clock candle, we got a sell signal because price broke the M structure to the downside. It was immediately stopped out. In this case, we can see, although all the criteria meets our rules, we still can lose. That's totally fine because we followed our rules. It was not a trading error. The next day was Monday. Price actually bounced from the trend line and made a lower low in Asian session, and you can see there was the BIS and a smaller M and the neckline. In the start of London session, price gave 3 pushes up, 1 push, 2nd push, and 3rd push. In 3 o'clock, broke the smaller M and traded down. Depends on the candle, there could be a big news or something, but if not, it was a good chance to get in, but only in the lower time frame because we don't chase huge candles. So if we got a sale there in the lower time frame, imagine our entry was right after it broke the neckline of the smaller M, about 20 pips stop loss. This trade goes to 2.5R. The next day, we expected to be a day 5, but actually it didn't break Monday low and traded inside, so there was no trade. It was just inside day. After the inside day on Wednesday, we can see price broke Tuesday low at the start of New York session, but didn't give us a chance to follow. It was day 5. Those are all trending days. Next day should be day 6. We can see price made a BIS to the downside in the New York session and made an M here. This is the neckline. In the Asian session, price put back in 3 pushes. 1, 2, and 3. In this candle, this 930 candle, price broke the smaller end. There was our sell entry right there. Okay, and it goes 3R. And after that, in the London session, price reversed up, broke the trend line and traded up. There was the false breakout in the day 1 to the upside. And on the Friday, day 2, price been pulling back for the whole day. And we're waiting it pulls back to this neckline, but it never did, so there was no trade. And we can draw the new trend line accordingly. The next day was Monday. Price didn't break Friday high and consolidates all day. There was no trade for the inside day. Next day was Tuesday, day 3 to the upside, but we don't see any clear chance except for the trend following here. We don't know if it 9 o'clock New York session, but since price already broke yesterday low, became bearish, so there was no buy here. We need to wait for another day. Also, if it's still the uptrend, this day 3 might become day 1 to the upside. Okay, the next day, Wednesday, was day 2. We didn't see any clear and strong up move to follow, so there was no trade. The next day was day 3. Price pulling back all day, but still above the trend line. There was no trade. No trade for us. And on the day 4, Friday, price bounced off from the trend line with a strong up move in London session. It didn't come back to the neckline, so there was no trade. Also, another neckline was missed in the New York session. Also, the pullback was a little bit strong. We were not supposed to buy there. Next day was day 5. We were waiting for price to give us a strong up move follow, but there was none, so there was no trade. It became an inside day. Finally, price broke the trend line in the Asian session. For the next day, became bearish. Before London session, we can't see any follow-up sign. There was no clear pullback to the neckline, so there was no trade. And over the last 3 days, we can see price actually made a false breakout on the upside and broke down, so we can call it day 2 to the downside. We can also mark the M structure and the neckline. For the sell, we anticipated the trend line was like this. The next day was day 3 to the downside. There was no strong down movement to follow. We just let it go. Also, it became an inside day because it didn't break day 2's high or low. So for the whole May, we have 1, 2, 3, 4, 5, 6 trades altogether. There was 1 loss and another 5 wins. I totally understand. People will say you're trading on the history chart, and I understand the difference between hindsight and live trading. I'm just, giving you guys the idea how this strategy works. You need to have the mindset, the rules, and how to judge if there is a chance between different pairs. Find the perfect trade for the coming session. And if you have any questions, feel free to comment. Also, if you are interested in the strategy and want to learn more about it, you can go to tradefactor.com and you can see our course at the bottom of the homepage. If you like here, you'll learn everything from A to Z, all the details of this strategy, and we'll have an incoming Discord server so we can all trade together. Thanks guys. Bye.